And welcome back to the weekly gold forecast. To start with, big shout out to Michael from Riding the Waves, who posted some excellent analysis this week. If you don't know him, Michael does weekly gold analysis for quite some time now, and he has a VIP group where he offers some great content for reasonable price. Make sure you check out his page, links in the description below. And now let's go back to the weekly forecast. Gold spot rose 2.5%, reaching $1881 an ounce by Friday, adding to the already whopping 10% gain since March, thanks to the inflationary expectations, which was also supported by the volatility in the cryptocurrency market. On a side note, Bitcoin is often cited as the new gold, but let's discuss the economics of this later. As you can see on the chart, even the situation in India could not stop gold to rise to the 1900 levels, well near to the 1900s, and the reasons for gold price surge is three things: the solid US inflationary pressures, decreasing US government yields, and the weakening US dollar. Higher US inflation and lower government bond yields have lifted gold back to 1870-1880 area. And the forecast for next week. So starting with the technical analysis, you can see that the price is really close to the 1900 area, which is a strong psychological number, and also we have multiple confirmations sitting at this level. So in my humble opinion, what's going to happen next week, if you just go down to the daily time frame, is that the price is likely to retest the 1898-1900 area. So it's gonna jump up somewhere around here before we have a bigger correction to the downside. Now, as you can see on the chart, I already marked multiple support and resistance levels, so you don't have to do anything because I made the analysis ready for you. Okay, so if price retests the 1900 area and it's gonna have some correction, the first destination will be 1849, 1850, which you can see the strong support and resistance level right here. Also, we have a Fibonacci level here, and we have the crossing of the two trend lines, the bullish ascending trend line, and we have a bearish descending trend line on the weekly chart. So as soon as price retests the 1900 area, it's more likely going to retest this area right here. Now, if the price breaks the bullish ascending trend line for any reason, you can see I already marked another two possible support level. So if the price spills over for some reason, breaks the trend line, comes back and retests it, the next destination will be 1815, and after that 1800 area. In case of a bullish continuation, the setup and the playbook is exactly the same as it would be in the bearish scenarios. The first thing the price has to do is come and retest the 1900 area, and then we would have a small retracement back to the 1845, even the 1815 area. So because we don't know what's going to happen next week on the capital markets and the forex markets, that's why we have several support lines. And either case, if price comes back to retest the 1848 or the 1815, I would expect the bullish continuation to find support, and the next destination will be the 1950-1960 area. So as soon as the price steps into the 1845 or 1815 area, I will definitely give a heads up to the members in the AlphaFX Academy group. And once we reach this level, all we have to do is watch price action, and if the price respects these levels, one of those, then the next destination will be definitely the 1950. When you do any kind of technical or fundamental analysis in financial markets, whether it's forex, stocks or commodities, it's important that you absorb as much information as possible and come to a conclusion by yourself by digesting all the information, opinions and views. And that's what I did when I went to the Bloomberg Premium Commodity Research function and had a look about what the biggest institutions and analysts have to say and what's their forecast about the gold USD spot market for 2021 and 2022. Now you can see that in the list we have some of the biggest banks with the greatest analysts who have the finest pedigrees in the whole world are in the list. Westpac, Deutsche Bank, Commerzbank, the date when they submitted. Now we can omit the bottom of the table because it's really outdated from February and March, and I would go with the April and the May ones. The top of the table represents the statistical average of all of the data submitted by these analyst firms or analyst houses or investment banks. And you can see that for 2021 second quarter they forecasted 1775, so that was the mean, and the average was 1794. Now, from the technical analysis, we know exactly that on the 1794 or the 1800 area, we have a really strong support level. So there is a possibility that the price is going to drop, but I don't think it's going to happen. For one reason, because these, most of the data, it's quite not outdated, but so many things happen in the financial market, and markets change every day. New data comes out, and I think when they prepared the data, it wasn't priced in yet because they didn't have the information or the knowledge what happened, a week ago or a few days ago. So just because this data was prepared by some of the finest analysts in the whole world, it doesn't mean they are going to be right. So have a look in this data, absorb the information, and come to a conclusion by yourself. Now, having a look at the chart again, we can see that we are not far away from the 2020 highs, and this time of the year we have something that we didn't have in 2020, which is inflationary pressures. Yes, inflationary pressures will be the number one theme that will control the gold USD spot market in 2021. But my biggest issue with inflation is that the CPI numbers that are publicly forged by our national statisticians. The basket of goods, which they measure the inflation with, doesn't truly represent the median household because they simply omit certain items, or more importantly, the weighting of the items are unbalanced. For example, the past years, gas prices have gone up by 30%, tuition fee has gone up by 20%, housing gone up by 40%, which all have a knock-on effect on household purchasing power. Yet the Office of National Statistics and the central banks claim that there's no inflation, and this is all because they don't want to scare the capital markets or create turbulence. Well, it's dead late because we have already asset price inflation, which will soon spread to product inflation. Okay, I have another interesting chart for you guys, which is the ETF gold holdings and gold price. Now on the chart you can see that we have some of the biggest ETF companies in the whole world, and also we have their holdings or positions in physical gold asset, because ETFs are one of the best indicators if you want to forecast demand on the gold USD spot market. The reason for this is because ETF companies are mandated to have the units that they're selling to investors and retail clients backed by actual physical gold. In the list we have some of the biggest names, for example the SPDR Gold Trust Gold Holdings, which was brought to the market by State Street, and you can see that in 2020 we had the high of $2,070, so this is where we had this small increase. Well, it wasn't small, it was huge increase, but also on the other side, which is not represented, are central banks. But omitting the central banks, you can see that ETF companies had a surge in gold purchasing. Then we had a drop in 2021, obviously they closed positions, etc, etc, and you can see that the demand is picking up again. So I try to post more of these information and data so that maybe we can see where is the gold market going by predicting the ETF purchasing and inflows and outflow of the funds. Now, this was the weekly video, guys. If you get any value out of the weekly videos, if you learn something, please give something back. Hit the like button, subscribe to the channel, and leave a comment below. Now, this was Thomas and the AlphaFX. Have a great week.